Hello, I'm Bob Bruce from Integrity Wealth Consulting with an educational economic update for January 2017. In this month's video, we'll discuss some of the major headlines that influence markets in December and provide insight as to what these developments could mean for you as the investor. Please stay tuned at the end of this video for our required disclosure statement. In the final trading days of 2016, the market rally we've seen since the presidential election began to calm as all three major indexes posted losses for the week of December 26th. Despite this, the S&P 500, Dow, and NASDAQ were each up over 2% in December, and they posted gains for the year, with the S&P adding 9.5%, the Dow up 13.4%, and the NASDAQ increasing by 7.5%. Arguably, the biggest economic event that we experienced last month was the Federal Reserve's much-anticipated interest rate increase. On December 14th, the Fed raised the benchmark rates by 25 basis points, which was only the second time that they've actually increased rates since 2006. Federal Reserve Chairwoman Janet Yellen explained her group's decision reflected the economy's progress and its expectations for continued economic development. The Fed also indicated it might introduce 3 additional interest rate increases in 2017, up from the previous prediction of 2. Unlike the market volatility after the Fed's last interest rate increase in December of 2015, investors had a much more subdued reaction this year. The VIX, a main measure of volatility, increased somewhat in December, but ended 2016 at 32.2%, lower than where it began in January. Ultimately, rising interest rates are a sign the economy is growing. Last month, we saw several indications of this growth, including the final report on third quarter gross domestic product. In the Commerce Department's analysis, it adjusted the GDP up to 3.5% for an annual rate, showing the fastest economic growth in over 2 years. GDP wasn't the only economic measure that beat expectations in December. Measures of consumer sentiment and consumer confidence both reached levels not seen in many years. Consumer sentiment, which measures consumer views on the current and future state of the economy, reached its highest reading since January of 2004. Measures of consumer confidence also hit a 13-year high, indicating that people feel more positively about business conditions, employment, and family income. In addition to these positive signs, we saw the dollar hit a 14-year high on December 20th and end the year up 3.8%. Crude oil also continued to recover as investors anticipate that OPEC and other producers will begin to reduce their output in 2017. But of course, positive economic indicators do not mean everything is perfect. Data released in December showed decreases in durable goods orders, industrial production, and housing starts. Now, we don't like to see these declines, but the biggest economic question marks may not come from existing data, but instead from changes in our political leadership. Stocks have rallied on hopes that President-elect Trump will reduce regulation and taxes while increasing infrastructure investment. But no one knows for sure what changes could be on the horizon or how Trump's policies will affect trade. As we begin 2017, we will closely watch the economic data and the political environment. We'll also now turn our attention to the upcoming fourth quarter and the end of the year results to learn more about how the economy performed in the final weeks of 2016, while closely monitoring what lies ahead. Stay tuned for next month's video update when we will have annual data to discuss and look back at 2016. That's it for this month's Educational Economic Update. I'm Bob Bruce with Integrity Wealth Consulting. And please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call here at Integrity Wealth Consulting at 724-940-9060. We'd be happy to talk to you.